Hello traders, Cousin Benny coming to you from theclosingprint.com, January 3rd, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, with the exception of IWM. We had the major stock indexes ending higher on Thursday as stock markets closed out 2020 on a positive note. The Nasdaq logged its best year since 2009 after a stunning comeback amid the coronavirus pandemic. Tech giants Apple and Tesla were huge 2020 stars. Starting off 2021, we do have 15 bullish indicators, 4 are neutral, and 1 is bearish going into this first week of January. The heat maps have been fading a bit, so we need to keep an eye on that. We do see some activity in bonds that could suggest that a safety trade is starting to set up. Gold and silver have been bullish. They are showing higher highs and higher lows. Copper is neutral, forming a base, and crude oil has been range-bound for the last 3 weeks. We'll look at some IBD 50 names and a larger group of stocks from the Dow Industrials, which are set up looking very strong going into this week of trading. While Bukowski's showing 3 of his 5 indicators green, his CPI signal is green since November the 2nd at 80.8%. That's bullish, with 15 bearish patterns, 43 bullish patterns, and 397 patterns waiting for breakout. Bottom line, we're bullish. Breadth is slightly neutral to bullish. The S&P 500 Gamma has resistance at 3750 with support at 3700 for this first week of the new year. Starting off with the spiders, this is a Renko chart removing the noise, only price action. Until we see our first red brick, we can't forecast any major drawdowns in the short term. Therefore, as SPY continues to ramp higher, over 16% from the October lows up to the recent highs, RSI remains above 50. We're moving into an area of no overhead supply, new all-time highs, volume increasing, referencing 2 weeks ago higher than average distribution day volume. That's on our radar as we tested the 21-day last. So we'll look for any similar price action as a reason to think neutral to bearish. For now, going into the week, volume increased on Thursday. MACD is starting to turn, and we have stochastics embedded above 80. While some growth stocks did wane a bit last week, the Nasdaq has risen over 90% from the March 23rd lows, closing near all-time highs on Thursday. In addition, RSI remains above 50. Volume has been increasing over the last few weeks. Last week was a little bit below average, but MACD remains above its signal line. Most remarkable, of course, is the small cap performance, up nearly 115% from the March 23rd low. RSI is showing muscle. We did pull back 1.4% last week, as the small caps are starting to show signs that maybe it'll consolidate a bit, which would be healthy for the index. A broad measure of market participation, 2,000 stocks, something that we should keep a reference, as the broad measure of many of these indices, like the Wilshire, for example, currently about 3,900 stocks, a little misleading, up over 80% as well. Going into this week, the most notable thing is the cycle on the weekly time frame continues to thrust higher, with similar views of the smaller indices like the Dow Industrials, only 30 stocks. Cycle, though, is moving higher. A number of the stocks in the opening monologue all looking very strong from the Dow 30, together with a backdrop in the S&P 1500 composite showing a bullish signal, green above red and trending. S&P 500 S&P 400 mid caps, S&P 600 small caps, all moving higher. Note the Bollinger Bands are starting to open up. We've got a full week of green elder sticks, and histogram is above the trigger line at 2 and rising, forecasting an increase in volatility in the short term. Here we have the New York Stock Exchange with over 2,900 stocks trading. If we remove the candles or price action and just look at the moving averages, we see a remarkable change of direction in the 200 period moving average, the red line, versus the 50-day, which is rising rapidly going into January. MACD remains above its signal line. Most traders would not be surprised that histogram and the number of stocks trading at new highs versus new lows in the upper panel is above the zero line and bullish or positive, while the New York Stock Exchange advanced decline in the middle panel is making new highs as well. Elder Impulse is showing green sticks as price action consolidates in about a 3-week range-bound pattern. With that backdrop, a large percentage of stocks are advancing versus declining. In the upper panel, we have the advanced decline percent on the S&P 500, the mid caps, small caps, and the NASDAQ 100, all moving off the zero line. We've been watching this over the last several weeks as we reported in the previous weekly video newsletters. Long as these are rising but not overbought, we're starting off the week on a bullish footing. With a backdrop of the New York Stock Exchange McClellan oscillator, the sole and only bearish indicator we have for the week, notice the black line continues to drop. We could start to see a trough form, a higher low. So that's something we'll be watching closely. You can see the NIMO values in the background. The red shading is headed towards the zero line and was improving going into Thursday's close. So we'll keep an eye on breadth this week. That's one of the major things we should be concerned about, as that would measure the increase in the number of stocks participating in any rally or decline in the short term. The bond stock ratio between the 10-year and the S&P 500 still making lower lows and lower highs. That's telling us to favor equities over bonds. That said, the short end of the curve, the 1-3-year bond, is holding near highs, while the mid-duration 7, 10, and 20-year bonds are all moving towards the 50-day moving average. As we can see in IEF, the 7, 10-year Treasury bond, and TLT, the 20-year, while USB, the 30-year bond, shows something similar, a little bit off of the 50-day. Something that we should keep in mind going into January. The third week is the start of earnings. So this could be the start of some hedging by institutions. We won't know for the next couple of weeks. Keep an eye on these duration bonds together with the 10-year yield, high yield corporate yields, and junk bond yields. If the 10-year yield in this example continues to move higher, that's bullish for equities as well, along with high yield corporate, which is moving higher, and junk bonds, which are showing investors are okay with risk at the present time, risk on, if you will, versus what we saw back in February, where they evacuated these assets very quickly, selling into the drop as the markets pull back more than 36% from high to low. So keeping an eye on bonds as well as yields, the 10-year, high yield corporate, HYG, and junk bonds will save you a lot of stressful nights by just paying attention to where money is flowing. Presently more bullish for equities. While bonds show some signs of potential hedging over the next few weeks, we're also seeing the US dollar near its 2-year lows, below the 90 level, trading at 89.89 to close the week. We're looking for a bounce back up into this pattern, which would put more pressure on international indices as well as the emerging markets. We see RSI starting to move higher. This will also have an impact on commodities, whereby economically sensitive commodities like copper are starting to base again, like they did mid-year 2020, where it moved sideways for a good 12 to 16 weeks before breaking higher, forecasting better things for the housing and construction related names. Right now, assets are consolidating recent gains, while gold traded in US dollars breaks trend, is above the 50-day for the last 2 weeks. RSI rising, giving us the idea that there could be hedging going on going into the new year, and the first quarter earnings reports out of banks the week of January 18th, which can also be seen in the silver chart on the daily time frame, has been rising longer than the gold stocks and the precious metal, trading above the 50-day for more than 3 weeks. RSI above 50, looking for resistance as it approaches these upper 20 levels, while crude oil remains in a 3-week tight range-bound pattern. Bollinger Bands continue opening up after a 26-week consolidation. Stocks broke out in the crude oil patch several weeks back. On volume, MACD still above its signal line, so this is a positive or bullish correlation to the equity markets, so we want to see crude oil break higher in the near term, while we keep a close eye on gold, silver, and bonds for any hedging activity going into the first quarter earnings cycle, starting with banks January 18th. With earnings from Bank of America, Goldman Sachs, State Street, Comerica, etc., reporting in that third week of January. The sector heat map updated every Friday at the top from left to right, most recent week on the far right, showing us a change in temperature, which is telling us to look for a fade or consolidation, as we can see with the international markets as well. For this reason, we'll be watching the sectors very closely, most of them near the 21-day or above, bullish to neutral to start off the new year, while the lagging sector utilities moves back above the 21-day, testing the 50-day last week. Most of these look very strong. Energy is staying below the 21-day, consolidating for the last 2 weeks. But we have sectors like financials looking very strong, healthcare, communications, materials, technology in a sideways pattern, but strong, along with real estate. While the major world indices and ETFs trade near highs, the All-World Index ACWI, while the global leaders continue to thrust higher. Keep an eye on the indices. Remember, the US dollar moving higher would put pressure on some of these, though all of them, for the most part, are above a bullish 21 and 50-day moving average going into the new year. ATVI continues its bullish ramp higher, entry level around 83 when Doc Nigerian mentioned it. We bought the pullback. Stock continues to ramp higher. We saw Take-Two in Electronic Arts also seeing some action in the gaming software space, while AMD consolidates near the 21-day moving average. We're looking for this to bounce this week, with stochastics and MACD starting to turn. Amazon pulling back on Wednesday and Thursday. Looks like buyers stepped up late Thursday, looking for this to bounce this week. While Applied Materials sets up nicely, sitting right above the 21-day, closing above the 9 EMA. Buyers stepping up on Thursday, looking for RSI to turn up as a function of price, of course. Stochastics forecasting closes in the upper half of the daily range. Over the next few trading days, as this continues higher, MACD's turning. Look for a breakout. One of my favorite setups. Applied Materials been waiting for this to break out since last Monday. In addition to a lot of the pharmaceutical names that we like Bristol Myers, Merck, Johnson & Johnson, all getting a lot of action last week. Looking for a follow through and a push higher, a little descending pattern, breaking above this trend line, and RSI rising on volume with MACD crossing, and stochastic forecasting closes in the upper half of the daily range. Broadcom, another chip stock, looking very strong. 2-week consolidation at highs, looking for a breakout on volume. Stochastics rising, MACD's flattening out. With copper consolidating, many of these builder and construction related providers most likely will pull back to the 21-day. I'm watching for that for another entry or a trade on BLDR as volume increased on Thursday. Cadence Design Systems, chip related industry group, similar to Broadcom, sideways for a couple of weeks, looking for a break higher on volume. Stochastics embedded, MACD above its signal line. Retail related names like Crocs also finding buyers at the 50-day on the most recent retest. A hammer formed on Tuesday. Wednesday we rose, and then Thursday we tried to close above the 21-day and 9 EMA. Look for that to happen this week. Stochastics rising. MACD should turn as a function of price. RSI is back above 50. If this moves higher on Monday, Tuesday, this could be a nice day trade, short-term swing trade, back up to the highs, but we need to see that bullish follow through on Monday and Tuesday before executing. Digital Turbine looking for a follow through day. Stochastic starting to turn back up. MACD is showing signs of potential fade, so there's also the possibility of a lower high. Keep an eye on it. It needs to see bullish action on Monday early. Dynatrace showing signs of buyers on Wednesday and Thursday, looking for a follow through. ENTG also watching for a follow through on Monday, Tuesday. Stochastics turning up, MACD still fading. Etsy, after a pullback, consolidating at the 21-day. Watching for buyers and a potential setup here. There's always a likelihood that we could lose the 21-day, come down to touch the 50 and this breakout zone. If it does, I would be even more interested in Etsy at that point. FBC, as well as many of the banks. Remember, the week of the 18th is when they start reporting, so many of these could start to see a ramp higher into earnings, anticipating a higher yield environment, assisting in their bullish outlooks in their earnings and sales into 20 and 21. Floor & Decor, another builder provider. Remember, copper pulling back or consolidating. We're starting to see some reflection of that in these builder and construction products manufacturers, FND, pulling back to the 21-day. Watch closely this week. Futu, many of you trading this last week, watching for resistance overhead. If we can manage to get through this wick from Thursday, the volume indicates that we could see a test of the highs. One of the better setups going into the week. Maybe it flags, maybe it just takes off. If it does take off in the morning on Monday on high RVOL, a prerequisite, then this might be another day trade, short-term swing back up to 52-week highs. Volume certainly indicating institutions are buying hand over fist. Stochastics rising, MACD crossing. Hologic bouncing at the 50-day, looking for a retest of the highs. RSI is rising. In the healthcare group, LRCX, another chip stock holding the 21-day, watching closely. Need to see a follow-through day. Otherwise, this could test the 50-day in the short term. Stochastics oversold. Logitech, from previous watch lists over the last 3 or 4 weeks, if we start to fade a bit back to the 9 EMA, maybe take a little profits off if you're still in this one. Looking for a little pullback to the 9 and 21-day. If that doesn't happen, we get a follow-through on this breakout. Trade accordingly. and tighten your stops. Marvell, another chip stock, but looking much stronger, similar to what we saw on Micron last week, giving us a nice breakout Wednesday and Thursday. Looking for similar price action on MRVL, volume a little bit below average, MACD's above its signal line, stochastics rising. I believe Pete Najarian mentioned this one on Wednesday or Thursday. Monolithic Power, we mentioned this one Monday, Tuesday, followed through Wednesday, Thursday, looking very strong. For potential day trade or follow through, just tighten up your stops if you're still in this one. Bring it up underneath Thursday's low. Monster Beverages continues to ramp higher. Potential day trade here as well. Follow through if it starts off on high RVOL like we saw on Thursday, then we might have a good trade going into the new year. Nvidia, another chip stock, just consolidating below the 50-day. It needs to get above that area before we're interested in taking it long. Palo Alto Networks, after that massive ramp higher on many of the stocks like FireEye, CyberArk, and Palo Alto, consolidating present gains. We're keeping an eye on this going into the week, along with the payment processors and PayPal, which consolidated just above the 21-day. Bullish look to it on Thursday, starting to look for a follow-through. If we get a follow-through on Monday, this could be forecasting a retest of the highs for a nice day trade. If RVOL picks up and we see some sort of news, that would be great. Otherwise, look for PayPal to continue to move higher. RSI is rising. PennyMac Financial and the whole sector seeing price action more bullish lately, looking for this bounce to continue Monday and Tuesday. As RSI stays above 50 and volume increasing, stochastics is starting to turn. PerkinElmer, a nice clean looking chart coming off of the 9 and 21 day, most likely continues. Look at RSI. MACD's turning, stochastics is turning, volume increasing. Everything looks good to go on PerkinElmer, PKI. Pool from previous watch lists continue this follow through. Once it moved above the 9 and 21 day and surpassed the 50 day, this one took off to the upside. For the last week, it's been consolidating. Looks like it wants to break out and test those highs for a day trade, short-term swing. RSI suggests higher prices. MACD above its signal line and stochastics rising. Just need to see more volume. COVID-19 vaccine-related names. Argen, another name, looks very strong. Looking for a follow-through this week. MACD turning, stochastics turning higher, volume increasing on Thursday, looking for a follow-through. ServiceNow looking for a bounce, consolidating for the last week above the 9 EMA, but not dropping below. Notice the wicks along the 21-day, that's buyers. That would be your stop if it took out that level. RSI is rising, volume increasing, stochastics turning. Synopsys, another day trade look to the setup, maybe a follow-through trade. If you're already in it, tighten your stop, bring it up underneath Thursday's low. From your stop below the 9 EMA, just tighten it up a bit as RSI is trading a little hot at the 70 level. Taiwan Semiconductor, after a 3-week tight consolidation, looks like it's going to continue higher as well. Volume increasing on Wednesday and Thursday. MACD's turning, stochastics rising. I know a lot of people like this one, looking for a follow-through. Tempur-Pedic, I know a lot of people are still in this one from previous watch lists, looking for a follow-through. As this one consolidates, coming back to the 21-day, lose the 21-day, I'd probably take more of my position off, all depending on how we start off the trading day, Monday and Tuesday. Trade desk at the 50-day, after a really nice run-up from the late September breakout above the 50-day, consolidated each time it came back to the 21-day, it reversed. Tested the 50-day last time at the end of October. Watching how this consolidates here. Trade desk, a lot of people probably be eyeballing this one as well. Volume increased, but started to taper off on Wednesday and Thursday. Watching how 50-day, if it holds or if it breaks. If it does hold, look for 382 or the 50% Fibonacci's to hold near the gap that we saw back the second week of November. And RSI at that point should be oversold and turning higher. Vertex Pharmaceuticals, along with a lot of pharmaceutical names, prime setups going forward. Looking for these to continue higher. Vertex has been holding above its 9 and 21 day over the last 4 weeks or so. 50 days starting to turn up. 50 days starting to turn up sharply. Looking for a follow through this week in a lot of these pharmaceutical names. As RSI continues higher, MACD turning back up, and stochastics rising into Thursday's price action. VipShop's holdings from previous watch lists continues to ramp higher, breaking out on Wednesday and Thursday along with a lot of other Chinese names. Looking for a follow through, a flag, or a breakout. Continuation of this trend, RSI is showing muscle, MACD's turning, crossing, and stochastics is pointing higher on above average volume. West Pharmaceuticals, another name in this group, looks very strong. Look for a breakout above this pivot high. RSI is rising above this volume by price band resistance, now support. Looking for a breakout in the short term on above average volume as the stock is climbing. With wind in its sails, with MACD above its signal line, the bulls are in control and stochastics rising as well. Other stocks from the MarketSmith Growth 250 showing relative strength, breaking out last week. Nice consolidation, a little channel down, breaking out on Thursday. Looking for a follow through, volume increasing, stochastics and MACD both turning up. Look for a little flag or a continuation for potential day trade or short-term swing on AVID that makes video editing software and platforms. BT looking for a follow through with the strength in Bitcoin, Bit Digital following through that last week. We saw many of you in the trading room along with Mondo into this one Monday, Tuesday, Wednesday into Thursday, just ramping higher on huge volume. I wouldn't chase it. I would wait for an excellent setup on Monday. Perhaps we'll get a high volume, relative volume day. RSI is showing muscle, looking for a follow through on Bitcoin and related names. Five below, I know Anton and a few other people, as we were looking at the retail space, this one was looking very good the previous week. Last week it broke above the 9 and 21 day on Monday, followed through the rest of the week. Looking for a little flag perhaps, or a follow through in this small format discount retailer. As volume shows, institutions have been picking up shares. MACD had crossed and stochastics is rising. LSCC, Lattice Semiconductor, we mentioned this one as well. Over the last couple of weeks, this one started to gain some steam and momentum, looking for a follow through. As more semiconductors break out, we'll look for AMD and Taiwan Semiconductor, LRCX, AVGO, all of them to move together, hopefully, with Lattice looking very strong as well. And Micron, which we mentioned previously, out of this little channel down, following through off the 9 and 21 day, took off on Wednesday and Thursday. Volume increasing, MACD's turning, and stochastics forecasting closes in the upper half of the daily range until it gets overbought again. OMF, one-man holdings, don't know much about the stock, but it's in a nice trend. This showed up on the relative strength scan on the MarketSmith Growth 250. PagSeguro, we pointed this one out several weeks ago. Also looking for the breakout. We got that on Wednesday and Thursday. Looking for a follow through this week on above average volume, MACD above its signal line, and RSI showing muscle. Take Two along with ATVI. Thinking ATVI leading the way. Take Two could chase very quickly. Looking for a follow through. Volume increasing, MACD above its signal line. While stocks like Tesla also showing up on the relative strength scan, breaking higher last week, piercing the $700 level. Looking for $1,000 on this one. Volume increasing Wednesday and Thursday, MACD turning. Having been included in the S&P 500 index, a lot of people, market pundits, talking about how they thought Tesla was going to sell off after inclusion. Instead, it's breaking higher, trending strong along the 9, 21, and 50 day. All of these stacked going into the week. RSI rising, suggesting higher prices on Tesla in the short term. Volume increasing, MACD and stochastics both turning higher. If that weren't enough, the opening monologue also reflects the stocks that we are interested in trading on the Dow Industrials, the 30 stocks. All of these on these 5-minute charts closing higher, the ones we're interested in, like American Express, above VWAP at the close. Caterpillar also looks strong. Cisco, Goldman Sachs, Home Depot, IBM, Intel, 3M. I think you get the point. JP Morgan, Johnson & Johnson, another one of those pharmaceutical names that look good. On the 5-minute charts, all closing above their VWAP for the week. For Thursday, looking for a break higher in many of these names, trading above their 21-day. Caterpillar very near the value area. Cisco, DD, I think Anton is trading this one. IBM looking good, strong. Goldman Sachs, J&J, Merck, another pharmaceutical name that we like a lot. Microsoft bouncing off the 21-day area, buyers stepping up on Thursday. UNH, United Healthcare looking strong. Travelers Insurance, this is Mr. Flood, trades the insurance names quite extensively, looking for a lift there. Walgreens Boots Alliance bouncing off the 50-day. Along with Visa, another one of the credit card processing companies looking strong going into the new year. Okay, traders, that's going to do it for me. This is Because of Any coming to you from theclosingprint.com for this January the 3rd, Sunday, the first week of trading coming in. A watch list later tonight. I'll send that out around 11:30 on the East Coast, about 8:30 on the West Coast. Lately, it's a little bit later because I'm spending a lot more time with the family in our new digs down in Myrtle Beach. With the bottom line that we are more bullish than bearish going into the week. We've got 15 bullish indicators, 4 neutral, and 1 bearish. So everything looks good for the week. Take care. I hope this helps, and we'll talk to you soon.